Welcome to the Daily Business and Finance Show. Exploring economic shifts, U.S. job growth and rising unemployment, China's massive chip fund, and Biden's housing proposals. Tech tensions, Microsoft versus Russian hackers, Nasdaq's profit-taking impact. Stock market surprises, Petrobras dividend dilemma, and today's top 10 stocks outperforming Nifty 50. Stay tuned after this short ad break to delve deeper into these headlines. In February, United States non-farm payrolls surpassed expectations by adding 275,000 jobs, in contrast to the forecasted 190,000. Yet, the unemployment rate unexpectedly climbed to 3.9% due to layoffs in January and a decrease in job opportunities for skilled workers. Despite this rise, unemployment has consistently stayed below 4% for an unprecedented period of 25 months. This information implies that if this pattern persists, the Federal Reserve might contemplate relaxing policy.
China is on track to amass over $27 billion for its largest chip fund to date, known as the National Integrated Circuit Industry Investment Fund. This move aims to propel technology development and counteract restrictions imposed by the United States. The fund will provide support to domestic chip manufacturers such as Semiconductor Manufacturing International and Yangtze Memory Technologies. This comes as China strives for self-sufficiency in light of increased limitations on access to advanced semiconductor technology from countries like the US, Netherlands, Germany, South Korea, and Japan.
Shares in real estate surged in response to President Biden's proposal aimed at decreasing housing costs and boosting supply. This comes amidst soaring mortgage rates and a scarcity of homes. Firms such as Redfin, Max Holdings, Zillow Group, Compass, and Open Door Technologies all experienced growth. The strategy encompasses a $10,000 tax credit for those purchasing or selling starter homes for the first time. Despite this, there is skepticism among analysts regarding the likelihood of the tax credit being approved by Congress before Biden's term concludes.
Microsoft has announced that a Russian hacking group known as Midnight Blizzard has illicitly obtained some of the company's source code amidst an ongoing cyber attack. The technology behemoth suspects that the hackers are exploiting data they had previously pilfered to gain unauthorized entry. Even though there's been a 1.1% decrease in share value, Microsoft guarantees that no systems which directly interact with customers have been breached.
Brazil's oil company, Petrobras, recently disclosed a Q4 net profit that fell below expectations, leading to an 11.5% decline in share prices. The firm also revealed plans for reduced shareholder payouts, which has raised questions about future dividends. CEO Jean-Paul Prats hinted at a strategic shift towards investing in renewable energy sources. Meanwhile, President Luiz Inácio Lula da Silva is advocating for increased expenditure on refining and energy transition processes. Despite revenues increasing by 15.3% in the fourth quarter, both the net recurring profit and adjusted EBITDA did not meet projected estimates.
Analysts from Goldman Sachs have released a report stating that the leading stocks of today are trading at lower valuations and possess higher profit margins compared to those during the peak of the tech bubble. Even though these stocks constitute 33% of the S&P 500 market cap, they still have lower multiples. The analysts also pointed out that while market concentration might be worrisome, historical data indicates that catch-up episodes occur more frequently than downturns following periods of peak concentration.
Friday saw Wall Street closing on a lower note, influenced by mixed responses to a jobs report and profit booking within the tech sector. The Philadelphia Semiconductor Index experienced a 3% drop, however, this did not impact the overall market health. In February, the U.S. economy saw an increase in job additions beyond expectations, yet there was a slight rise in unemployment. Additionally, Treasury yields witnessed a decline.
Petrobras stocks experienced a 10.1% drop as a result of an unsatisfactory dividend payout, mirroring investor discontent with CEO Jean-Paul Prats' attempt to balance shareholder interests and the renewable energy goals of the Brazilian government. The firm's choice not to declare extraordinary dividends has resulted in multiple analyst downgrades and heightened risk perception. This action indicates a possible shift towards growth, which could lead to increased capital expenditure and more mergers and acquisitions.
And that's a wrap on the Daily Business and Finance Show. Keep investing, keep growing, until we meet again tomorrow. Stay financially savvy. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.